Hi, everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. And our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to look at some of our new tools that we released just last week, the macroeconomic event calendar and the ETF Heatmap. We'll also look at the brand new community tab, a place where you can engage with other ORATS members, ask questions, and share trade ideas. Before we get started, Matt, do you want to go over our positions from last week on Expedia and SPY?
Yeah, let me share my screen. Yeah, sounds good. Exciting new stuff. I love the macro events calendar. So excited to talk to you, share about it. Yeah, so we had an Expedia. We were looking last week at some new types of trades, complex trades. We did a double calendar. We did a butterfly with a short vertical on top of it, a 132. I lost my roommate. And so, yeah, let's check it out. So the Expedia, it's about break even, a little less right now. Again, you could click on that and see the payout picture. So we're right here. So we wanted to go one way. Oh, actually, this is a not a double calendar. This is a reverse iron butterfly. So we're long a straddle and we're short the wings. And so we want it to move. It hasn't moved yet. So we're hoping it's down 1% today. So it's looking a little bit better. So that's the first one. We have plenty of time, 26 days. So yeah, hopefully we get that moving. The other trade that we put on was SPY. That's the 132. So that looks like a butterfly with a short vertical. So it's a call. So and then we call butterfly. That gives us that kink right there. And then with the short vertical, that gives us this look. And so SPY's been up, but it's getting in actually the good position, but we still have a lot of time for this. Kind of wish we did a shorter dated one. Maybe we'll do that next time for this particular one because it depends on theta. And we also, what we're doing, Tyler, should I bring up the option scanner and the templates? Is now a good time for that?
Yeah, I was just going to ask. We had a comment on our YouTube last week asking us to upload the templates, and we did. So these scans that you see that we did on the show last week, you can easily set them up by going to the templates tab in the option scanner and then clicking on it. And from there, you can change it, edit it, and save it to your own scans, and do whatever you want.
Yeah. So what Tyler's talking about is, so we have the scanner, my scans, and templates. So this is the one that we saved. It has the ratio vertical, the 132, and the reverse iron butterfly. You can, delete the ratio vertical, save to my scans. So you could save it, and then it'll go into your scans out from the templates. So there's a lot that you could do with it. Tempted to see what they got going. So we got an Oracle trade here. Ratio vertical. Anyway, this isn't part of the show, but I'm always wondering what the best trade is right now. So that's not how we're going to do it. So we reviewed the trades. We went over what we're going to start doing more often is saving the templates if we do an option scan. So we have that. Anything else on this before we jump to the actual meat of the show, Tyler?
Yeah, let's get into it.
All right, cool. So the new things, drum roll. We should have a drum roll. Maybe Luis and could get a drum roll going on the background. Luis is here helping us out with Tradier. Anyway, so here's the market intelligence. You have positions, trade ideas, but the market intelligence is where the macro calendar is and the ETF. So the ETFs is nice. So you could go there and you can see what's moving today. Interestingly, VIX is up. This is kind of interesting today. And then with the market up generally. So the Qs are up, and SPY is barely up. So we highlight the Qs, IWM, and SPY, and then we show a lot of the rest here. So that's nice. And right after the close, if you have live data, you'll see the big movers post close, and you can even do that with the top movers here. So that's really neat to see, especially in earnings season. You can see what's going on, what's moving a lot. So that's cool. But my favorite is the macro calendars. So what the macro calendars do is we bring in the macro calendars, we rate them on 1 to 4, and then we put them by time what's happening. So you can see very quickly the days that are going to be big mover days. So what we could do is we could see that Wednesday 5/22 has a big events there. There's a lot on Thursday morning and a little bit on Friday. So how you might use this is, especially if you're trading short term or zero DTEs or whatever, you want to really watch what's going on at what point in the day. And so, you could look, what's going on Tuesday, the 22nd, and shows them what's going on. Wednesday, the 22nd, existing home sales, oil, and the bond auction. What's going on Thursday morning? A bunch, jobless, it's a PMI. And then I should also then show you, the options chain for SPY. And we could see how that is kind of correlate. Today's moving around a decent amount. So we could see that the vol's up. This is that gray kind of line. It goes, and these are all the points, all the volatility points for the month. So this is the 21st that we looked at. Here's the 22nd that we looked at. So you could see that the volatility is higher for the 22nd. So it's 9. The volatility here, well, we should probably put implied, but I didn't have room. Is 12 versus 9.9, 13 on, that's the big day. And then the 24th is that Friday. And then you got the long weekend, Memorial Day in the United States. And then so it kind of flattens out after that. But you definitely got some, a bubble in here. So I thought that was interesting. What I also thought was interesting was NDX. Are we doing all right so far, Tyler?
Yes, doing good.
Okay, cool.
Yeah.
So I thought NDX was interesting, but this is even more pronounced. I thought this was quite telling. So
yeah, that's very interesting, that gap there.
Yeah, so it's like 13 versus 20. So that's going to be the trade. We're going to figure out a trade that we could profit from this, equaling out maybe a little bit.
So you sort of jumped to this, because you saw some events happening in the macro calendar. They're happening Thursday morning. So you said, okay, let's look at the Thursday expirations or the Wednesday expirations.
Well, yeah, I mean, so what should happen is the volatility should be reflective of what's happening on that day, right? And so they're basically saying there's nothing happening on Wednesday and a ton happening on Thursday, right? But we could see that there's a fair amount happening Wednesday, and an okay amount Thursday, and some even Friday. So if we do the Thursday, if we sell the Thursday, buy the Wednesday, I think that's the trade based on the stars and the movements and all the things that we have there.
Yeah.
So the problem is, especially for NDX, it's a huge. I don't encourage people trading this that much, but this is where do you get the most leverage. So you always have to be spread, meaning you can't do a short calendar. A short calendar is when you would sell one in this month, and then you would buy one in this month. Now the problem, if you know margin, you can't sell a farther out one. They're okay. The margin's fine if you're buying the farther out, but if you're selling farther out, you pay like the full boat. It's almost like a naked option here. So it's ridiculous, like $90,000 to do that. So you can't do that. So you have to do a spread. The problem with doing a spread is it kind of, you have to take the Vega. You have to be short Vega in this one, long Vega in this one. So the way to do that is to do a short vertical or some type of a trade that is short Vega in May and long on the day before. So 3 days and 4 days. So the way that we would set that up, and usually I could do that in the scanner, but I'm not going to do it because it takes a bit of time. So I'm going to open up and so I'm going to actually you could do it from here too. Well, I'm not going to do that. So you could go to May. By the way, I think it's a little flat too. So the skew, usually as you go out, like let's talk about that for a second. So this will help. So you can see that this slope is getting, it should be around 3. And the farther out you go, it usually gets a little bit steeper. But now what we're seeing is it's getting shallower. So this is steep. So we probably want to buy skew here, sell skew here. So when you buy skew, you're buying the lower strike, selling the higher strike. So that's a long call spread. So we'll do a long call spread against a short call spread. Hopefully that wasn't too complicated. So May, we want to do kind of an out of the money. May 22nd, we want to do an out of the money call spread. And then we want to sell the same strikes the month after, or the day after, I should say. So let's see where we get some decent premium. Some of these are wide, some of these aren't. So it's 18.6. So let's do the 18.7. So we will sell we're buying. So, and this is the May 22nd. So buy the 1870s, maybe sell the 1850s. So that's pretty expensive, $20. But then now you go in and you go to the next day, which is the Thursday, and we're going to do the 17. We're going to sell the vertical.
Could you set this up in the option scanner as a custom scan?
You could, but like I said, it would take too long, and I wasn't set up to do this because I just identified this. So
Gotcha.
we probably did. So now we're going to sell this. We're going to sell the 700 and buy this. So that's selling skew, and now we get a credit. So we get $500. So we'll go a little bit past the 465. So we'll go to what will we go to? Maybe we'll go to 460 and force that. So that'll be our trade for this week. And it's in paper trading. We force it at a decent price. And there we go. So we'll track that. We'll track that trade, Tyler, and beyond. Awesome. So now I want to talk about anything else. So anyway, let's just go through briefly what we did. We did the macro calendar. We saw that Wednesday had a lot going on, but if we looked in the option chain, which actually has a very good visual on the kinks and the skew, this looks really odd. So we decided to go buy that 22nd, sell the 23rd. So we did that, and based on our macro calendar, and then we figured that we couldn't just do a short calendar. We had to do one that didn't have naked options on the farther out month because of the margin. So we did we were deciding between a short call spread calendar versus a put spread calendar, and we looked at the skew, and we decided to do the call spread calendar. So that's a lot, but it's a lot of good stuff to learn. We're getting more advanced. We've had a lot of these videos, so we're getting in some more advanced topics that are pretty powerful.
Yeah, definitely. Thank you for sharing that, Matt. And yeah, these new tools, the macro calendar and the ETFs are, going to help with some of the more nuanced trades, perhaps some zero DTE trades if you're into that with the economic events.
Yeah. And then what I'll do maybe is we'll go to the community. I'll talk about the post I did today. And then if we have time, we'll set up that we'll set up that short term structured calendar trade. How does that sound?
Yeah, sounds good.
All right. So this is our new community calendar. We post in there quite a bit. If I see something or if anyone sees anything, they would post it. So this is very large trade goes up in VIX. You put images in there and then you can blow them up and see what's going on. So there was 45,000 contracts went up, kind of 1 by 3. So they're buying 3 of the calls, selling 1 of the put. So that is an extremely bullish, huge dollar delta, a lot of edge in there, trade that they did. So I went and looked at it and I said, okay, so what's going on? Well, someone clearly thinks that there's something going to happen in the market, and that's kind of a lot of what we saw, coming up. But this is that's a longer term trade. I wonder when they get out of it. So the reason how I found that again, it was in Market Intelligence largest trades. It's not the number one. It's fallen down the list here. Where is it? It's strange.
I think we changed. You got to change the sort. I think at the top. Maybe find it by.
Yeah. Well, we'll check it out later. But now, if this is where I found it in the morning, and it even might have been pre-open, so I might have got it before it cleared out. But this is this is where I found that particular one. Now the biggest, so we could sort on many different things: absolute trade amount, dollar delta, if someone's getting long or short. So this is what is this? A risk reversal. This has in calls have the biggest dollar delta. So you basically multiply the contracts times the delta and the price of the stock.
Sometimes I like to sort by edge just to see, edge compares our SMV value to the price that they got the trade at. So you can see like if they had, a really good or a really bad theoretical edge on the fill.
Right. And then you could then pull up the whole trade. Let's see, what time was that done? 10 o'clock. So this is a short put. We had a high SMV on it. There's a short call, where there was a bunch of edge in there as well. So it's interesting to see, where these are trading. And then you could even look at the, trade history. Once you click it on there, you could click on the trade history and see when that trade went up, what our theoretical value was doing, what was going on with the stock. So it looks like, it went up here. And then, or actually it looks like it went up here. This is it right here.
Yeah, that's where the trade was, that volume bar right there.
Right. Yeah, it's a very wide market. Cool. So shall we go over anything else on so that's the community.
Yeah. I'm really excited about the community because, this gives people a place to share trade ideas and ask questions. And, ORATS can be, pretty advanced stuff. So this is where you can sort of get help and get some ideas on what to do and, get some use out of the tools.
Right. So you to sign up, you just go over here and it'll guide you through. Anything else on this community?
Yeah, that's all, I think.
Yeah, and then there's notifications and setups, getting emails, and you can do direct messages and all that.
Yeah.
All right, so let's go over. We have a couple minutes left here. Let's set up that. Let's clear out that. So let's clear all settings. we'll add a custom. So this isn't going to be a strategy in the list that we have. We're going to do that short. So, we have long call spreads, but now we're going to do, we'll do the call. First, you could also do the put. So we're going to do the call. So let's see. So we want, I think we get to set it up like this. And usually I'll go like this. -1, 1. So this is the ratio. So they're all going to be calls. So add custom. So like I said, it's not totally easy to do this. So we'll do a little bit fewer days. And then, these are good deltas. So you're just a little bit out of the money. So now what we want to do is, in this case, we want to buy actually what we'll do is 1 month. We want to buy the, so we're buying, so this is the 14-day, 10, 20. So we're buying the front and we're selling the back. Okay, so now we have to make sure that the leg relationships are right. So the first call minus the second call will be a negative number, right? So we'll be buying this, like whatever strike. So let's say 100 strike. And then we'll be selling the 105. So that has to be, this strike minus that strike is negative. So the minimum is going to be, strike width is going to be negative. And this is a little bit complicated, but this is how we have to do it. Strikes 2 and 3. So then we're going to be selling a strike and buying a strike. So then the same go. So this call, we're going to be selling the more in the money. So that's going to be the 100 we're selling, and we're buying the 100, 105. So that's the same. So that's -5. And then we'll do it on, let's do it on QQQ. Let's see what that looks like right away. No trade. So I wonder if I did this right. It's a shorter, the DTE diff. So it's 0, by default. So I'm just going to add a wide DTE just to, and we could lower, we could lower this later. So let's see if that worked. Because that's 0 is the default. Let's see if we get any trades coming in for this. Yeah, so there it is. So this is what, so this is the kind of skew trade that this has on. So it's only 1 point wide on that one. So it's not that wide, but we could see what it looks like in the option scanner. It's kind of neat to see, I think. So it's, these strikes, 461. Oh, this is 461, 461. Yeah. So, and strikes. So the strikes need to be wider. Yeah. So we need to set that, right?
Yeah, I think we need to set the strike width, I think.
So that cell in the front needs to be, but that isn't the next. This is why I said it takes a little bit of time.
Yeah.
And thought, but that's what I would do. Go in and set the relationship so we could see that that's not totally right now. So what we'll do, Tyler, is we'll I'll work on this and we'll publish the.
Yeah, we'll upload it as a template as soon as we're done here.
Yeah. So again, the templates are here, and it takes my old brain a little bit of time to figure out all the leg relationships and all that, but it ends up working. And you could really get in and get some customization going. It is a little bit confusing even for me sometimes to put it together. So we'll do that when I could do it not under the gun.
Yeah.
I used to be good under pressure, Tyler, but not anymore.
It's a complicated strategy.
Yeah. All right. Anything else, or should we wrap? I did get a call from one of the big news services today about NVIDIA's earnings, and then one of the things I talked about was, this is a new thing. It's really cool. So Tyler's put this in where we average all of the implied moves and average all of the actual moves. In NVIDIA, when I wrote about it, was higher. So this implied move is coming down. Another thing I wrote about NVIDIA was that the slope, this is kind of interesting, I think, SLOPE, the slope has really gone flat in NVIDIA. It started about, like, usually this is about average, about 2%. That means the put or the deeper strike 10 deltas under is about 2% implied volatility more than the strike that's more the higher strike. What's happened 1 year ago when NVIDIA and AI were discovered, almost the slope became negative, and what that means is that, and you could probably see it here a little bit better in the options chain. So see how flat that is compared to
it's very flat.
Yeah, so it's almost perfectly flat, almost negative. So you rarely see that. You see it, what it usually looks like is what we looked at before. It has some skew to it.
Yeah, I mean, we saw a similar situation happen to Tesla about 2 weeks ago, and we posted about it in the community and on our blog. But their slope went down, sort of the same reasons. There was a lot of the price went way up.
Right. Yes. So this is this is what you caught and wrote about when it was down here. Right? Yeah. So anyway, that's what I wrote about in NVIDIA. I should probably put that in the community. Huh, Tyler?
Yeah, sounds like a good idea.
When they post the story, I'll put it in.
Okay.
Cool. I think that's a good show. That's a wrap.
All right. Thanks, Matt. As you guys saw, the new tools, the macro calendar, ETF Heatmap, and the community tab, a great place to engage with other members and share your ideas. So that's all available to you guys right now. You can go sign up on ORATS.com. And if you have any questions about our tools or the show or trading in general, you can comment on YouTube or write us an email at support@orats.com. We'll be back again next week with another show, and we'll see you guys then.
Yeah, give it a like, because we responded to it, and that's how we changed. So comment and like, everybody.
All right. Thanks, and see you next week.
All opinions expressed by Trader Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trader nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trader nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Trader Inc. is the parent company of Trader Brokerage Inc. Trader Brokerage Inc. and Trader Inc. are separate entities with their own products and services. Securities products and services are offered through Trader Brokerage Inc. Trader Brokerage Inc. is an independent subsidiary of Trader Inc., all rights reserved, member FINRA SIPC.